Micron earnings are out for ticker symbol MU, so let's do a top-down analysis. We are now sitting at a market cap of $55 billion, a PE of 5.7, and a dividend yield of 0.92%. Tack on their repeated consumer demand and a consistent and proven business model, and on paper, that actually sounds like a long-term compounder in the making. So why has the stock declined 50% this year, and should we be buying into this pullback? Stick around to find out as we talk about that and more in today's episode. How's it going? Welcome to Everything Investing. Up and a great day. Today, we're going to talk about Micron's earnings and business results. We'll start with the full analysis into the financials, the top line, bottom line, cash flows, balance sheet, everything. Then we'll conclude with an evaluation of this business using our intrinsic value calculator seen on screen, which will identify whether or not this is a value investing opportunity or not. And if you enjoy the analysis and the value investing perspective, please like and consider subscribing for more of this content. As always, we will be doing this business analysis in 5 minutes, so let's jump into it. All right, so starting with their Q4 2022 earnings results, we'll start here with the comments from the CEO. And before we even jump into that, we can see right here this comment here in bold. It's that they had record revenue for the year in mobile, auto, industrial, and networking markets. So already, despite the economic challenges, they are producing record revenue. This is always a great sign for a business that we could be investing in here. Okay, so for the year, they were able to generate $30 billion in revenue, which is their 6th consecutive year in positive free cash flow as well, allowing them to return $2.9 billion to their shareholders. All right, and that their overall business, from their products that they develop all the way through to their deep customer relationships, diverse product portfolio, strong balance sheet, etc., is the reason why they were able to navigate the weakened near-term supply-demand environment. And that they're taking steps to reduce their supply growth, including a 50% equipment capex cut versus last year. They expect to emerge from this down cycle well-positioned to capitalize on the long-term demand for memory and storage. Okay, well, this sounds nice. How have they performed historically? And as you can see here, although it's not linear growth, we have seen a growth in their revenues in their top line year over year typically. However, with their net income here, you can see it has been a little more volatile. We'll see how this has translated for this quarter in just a second. First, let's look at their cash and debt figures here. We can see as this business got off its legs here, they did take on a good portion of debt, but they have reduced that recently, and now their cash figures have actually overtaken their debt, which is great to see from a business that aims to mature. But again, we'll look at this in just a second once we get into the balance sheet. First, let's look at the income statement for Micron, and we start with revenue here of $6.6 billion for this quarter. To produce that revenue, it cost them about $4 billion, so they're left with $2.6 billion in gross profit here. And when we deduct for our other expenses, research, development, SG&A, etc., we're left with operating income here of $1.5 billion. Now, if we compare this quarter over quarter, we actually had a 50% decline in operating income from last quarter. But to give you the full picture here, let's look at this from a year-ended perspective, since this is the fourth quarter results here. They produced about $30.7 billion in revenue this year. It cost them about $16.8 billion to produce that revenue, so ultimately they're left with gross profit of $13.8 billion. Deduct our expenses, and for the year they had about $9.7 billion in operating income. This actually is up year over year. And when we look at this from an earnings per share figure, they had about $7.75 in earnings this year, so let's keep that in mind for our calculation at the end of the video. Ultimately, despite the decline here, their margins have kept true to about that 40% range. So despite the decline they've seen in top and bottom line this quarter so far, there's not much to concern shareholders right now, as they are navigating a difficult period right now, and their margins are relatively still intact. Now let's jump into the balance sheet here. As we can see on screen, we have about $9.2 billion in cash on the balance sheet, which makes up their cash and short-term investments. And then when we look at their debt figures and compare those numbers, they have about $6.9 billion in debt. All right, so compare that 6.9 to the $9.2 billion in cash. Of course, the liquidity is not an issue here for investors, and this is actually exactly what you want to see. All right, and with that, let's jump into our statement of cash flows here. We start with our net income figure for the year of $8.6 billion. Add back in our non-cash costs here, and we're left with $15.1 billion in operating free cash flow. Deduct our capex figure of $12 billion, and we're left with free cash flow here of $3.1 billion. What did they do to reward shareholders? Well, they are committed to their repurchase program here, buying back some shares. They also did repay some debt, but then again took on some debt, so a net zero effect there. And then also they did pay out a dividend to their shareholders as well, just to reward them. Okay, when we look at this from a price to free cash flow ratio, this is actually trading very cheaply at under 10 right now. So if you're an investor looking for value right now, Micron definitely should be piquing your interest, especially if they're able to grow their free cash flow metrics from these levels. And if that's the case, the stock and shareholders should really benefit. Now let's jump into our intrinsic value calculator here to see what shares of Micron could be worth. And if we input that $7.75 earnings per share figure that they had for this year, we require a 10% return. They do pay a dividend. Historically, they were able to grow earnings per share figures at about 84% for the past 5 years. Because I'm more conservative, I'm only going to estimate that they can grow them at about 40% for the next 5 years. And then that declines to about 20% for the 5 years after that. On a 10 PE, we would be looking at about $624 per share for this stock. The stock is currently trading at $50 per share, so that would be over a 10x return. Now, in the very best case scenario, let's assume they can actually stick to 84% growth for the next 5 years. That drops down to, let's call it 40% for the 5 years after that on a 15 PE. Yeah, the stock would explode to $5,000 per share. Now, this, guys, again, this is really convoluted because of this growth metrics here. If we enter here in our worst case scenario, some average numbers here, let's assume they can only grow at 15% for the next 5 years. That drops down to 5% after that on a 5 PE as they're currently trading at. The stock would be worth $127 per share. And I think this is actually a lot more realistic here for Micron. In fact, from all the metrics down here at the bottom of our screen here, we can see almost everything is in a bright green color, which means we are actually trading by technical measures at a margin of safety right now. So a very cheap price to earnings ratio, a cheap price to sales price to book ratio, and also that relatively low price to free cash flow ratio that we mentioned makes Micron an extremely interesting business from this point of view. All right, and with Micron here, we are trading, like I said, at about $49 per share after hours. We have declined just slightly after this earnings release, and this is obviously because of the decline here that they had in top and bottom line. And that's really going to be what the deciding factor is for the investment thesis for Micron, because if the financials deteriorate from these levels, what we put into the calculator will obviously not make sense at all, and those numbers are going to change drastically. However, if they are able to get past and get through this challenging period, as they kind of hinted at with their executive statements, then the stock should balloon higher because the fundamentals will improve along with all their other metrics. So at the end of the day, the investment thesis goes as follows for Micron. Assuming we can make a rebound here and transition out of these challenging periods into quarters of more growth for Micron, we will see some nice stock appreciation. However, if things like competition comes in the way, further macroeconomic challenges, the stock will proceed lower and probably down towards $41, $40 per share. That is the analysis for today's video. If you've enjoyed it to this point, please leave a like and subscribe, and I'll catch you on the next one.